Hey everybody, I hope everyone is doing well and had a good day. In this video, I'll try to keep it brief and do a recap with this marked up chart of the Emini 5-minute chart for Wednesday, May 14th, 2025. And when I take a step back, I look at this chart and I think it's too busy. There's a lot of information on here, like as far as a lot of support and resistance lines. And I really would appreciate feedback from anyone who has any thoughts at all, if it's too much and overwhelming, or if it's okay, or whatever you think. It would really help, I think, the entire community if I get some feedback on that so I can adjust going forward, just because I look at these charts and I think sometimes there's a lot and I want to try to keep it brief, maybe 15 minutes, 20 minutes. And I always find myself going into 25 or 30-minute territory just because there's a lot to talk about, and I always get sidetracked going deeper into things. So that's just kind of the way it goes. So I'm trying to keep an eye on the clock, try to keep it brief, and let's go through the day. So today we opened with a gap up, and here's yesterday's close, here's today's open. I apologize for the pointer, it's my mouse, I don't have the laser today. Okay, we gapped up, and this is a PowerPoint slide, so I cannot pull up the Globex session, but it was mostly sideways trading range price action. And if we think about yesterday was a bull spike and channel trend, and the channel evolved into a trading range. Certainly by the end of the day, it was a lot of sideways. I forget the bar number, maybe around bar 45. The market broke below a major higher low, and for me at that point, it was in a trading range. And then certainly with this strength of the sell-off at the end of the day, I thought we were clearly in a trading range. So lots of horizontal trading range price action from especially the second half of yesterday. And I thought that would carry into today. So we gapped up to about the midpoint of the sell-off at the end of the day. And we had this bull breakout bar. It's a shaved bull bar. It's a great looking bull bar, but the context, you think about the fact that it's the open of the day, and no matter how strong a breakout looks, there's a 50% chance it fails. And the bar itself is a good looking signal, but again, the context is what matters more. So one thing that I've kind of learned from Ali, and certainly from Al Brooks as well, we have to train ourselves to have certain beliefs when it comes to trading. And one of those beliefs that I truly believe in is that context trumps signal bar. And so signal bar almost hardly matters. And compared to context, it doesn't matter. Context really is everything. If we think about bar 1 as a signal, it's a great looking bull trend bar. But if that was the only information you had and you didn't have the bars to the left, there's not enough information to make up your mind whether to buy or sell. Are you buying because there's momentum? Is there a bottom forming? Or are we at the top of a trading range? Is this a better bar to fade? It really depends. And because we have information with the bars to the left, we can see that the bull breakout bar isn't even breaking out above the trading range from yesterday. So we have to wonder, is this a vacuum test of resistance where sure the market's going up because bulls are buying, but is it also having a vacuum effect because the bears are stepping aside looking to sell higher? And we can see the weak follow through. Bar 2 is a strong bear reversal bar at the top of a trading range. The traders who bought the close of bar 1 or even bought the 50% pullback of bar 1 disappointed with bar 2. Now, bar 1, there probably should be buyers below bar 1. It's a strong bull bar. I would expect at least a pause, maybe a trading range bar, some kind of doji, even a bull bar. I imagine something like this, maybe. But instead, we broke straight through the low of the bar. And because of that, I think that was a low probability event. Although the momentum was good, we had a warning that the bears have a reversal and follow through. with really strong bars. Context was good. So it's big down, big up, big down. But instead of pausing here, we immediately went for 1R. We went for a measured move down. Because of that, the traders who bought at the low of bar 1, whether a bear sold up here and scalped out, or a bull bought to go long, they use a wide stop, they scale in, they're disappointed with the degree that the market sold off. Those both traders, bulls and bears, are looking to sell at the bar 1 low. So what probably should have been support became resistance. It's not the greatest example because the level I'm talking about is in the middle of a trading range, but I think it still applies here. Again, you have this strong bar, you expect a pause, but instead we broke straight through it, and we can see the reaction. So 4-bar micro channel for the bears. First reversal should be minor. Outside bull bar with bad follow through. Another outside bull bar. At one point, this was a bull bar closing on its high. Retesting that breakout point and then continuing down, the bears eventually got their scalp. If you sold here, the market went to a new low. You can say at this point the bears have leg 1, pullback, leg 2. Is this a major reversal? We're at support, good for the bulls, and bulls are buying at support, at least for scalps. But to me, it looks like the bears are still in control. We keep testing this resistance area and then find sellers. We test it a third time, but again, find sellers. This was a minor reversal. So tight trading range after this sell-off that should get a second leg, and we can say the bears got their minimum second leg, but it's not a symmetrical second leg. We have range expansion, range compression all through here, and then range expansion again, second leg down for the bears, this time symmetrical in size. You can see from the high of the first bar to the close of the last strong bar, projected down, gives us that leg 2 measured move. And then through here, it's basically a wedge double top. You have 3 pushes up to resistance. So the bears see a bear trend, a bear flag. The bulls have a bull channel. We're getting from here higher lows, higher highs, but then we get a lower high. And after 3 attempts to break out above resistance, each one failing, we have another give up bar. Now this is leg 2 in a trading range. Leg 2 is very context dependent because depending on the context, this goes back to what I said earlier, where context trumps signal bar. It also trumps leg count. Context is really everything because in certain contexts, leg 2 is strong enough that you treat it as a leg 1 reset. But in other contexts, leg 2 is so weak that you treat it basically as leg 3 or leg 4. It just depends on how it forms and where it forms. So here, climactic, big second leg down, biggest bar on the chart at the bottom of a trading range. And I want to talk about day structure a little bit here as well. So big up, big down on the open. The first bar and the first few bars of the day will foreshadow what the rest of the day will look like most of the time. That's why when you have a day that starts with 3 big bear bars like this, you'll hear Al say there's a low probability chance that today becomes a strong bull trend day. It's probably a trading range day or some kind of bear day, maybe a bear trading range day, bear channel, but to get a strong bull trend after this is unlikely. Each bar that gets added is more information, and we can draw conclusions with more certainty as the day goes on because we are presented with more information. So through this part of the day, okay, we have big up, big down, probably trading range day, goes along with the context at the end of yesterday, spike in channel, transitioning from channel to trading range, so carrying over into today, and then lots of trading range price action here. Big up, big down, with the gap, that's trading range behavior. This is clearly tight trading range price action. So limit order market, you expect breakouts to fail. We have this huge bear bar trying to break below the tight trading range, but it's leg 2. It's a possible second leg trap, trapping traders into selling low. where we really should be buying down here. The bears need follow through here, and when you get this bull reversal bar, this is a bar that always in traders have to respect. If you are short, you get out above this bull bar. If you're flat, you can also buy to go long. And some traders will reverse. I know that Al recommends traders to close a position and then maybe go long rather than using the reverse button. So for example, if you sold somewhere up here, you scalp out and reassess. It can be hard to hold short and then actually reverse to long, I think psychologically, but that's also a personality thing. And I think the better we understand patterns, the more confident we will be in doing things like that. But it's a personality, it's an individual call. So strong reversal follow through here after what looks like a bear breakout attempt of a bear channel line. We're getting lower lows, or you can just call it support. You can call it the close of yesterday support level. We broke below it for one bar, but got no follow through. So reversal and follow through, good context. And for day structure, it's probably some sort of trading range day. Bear trend days usually do not have strong, or let me back up. Days that become strong bear trend days usually don't have sell climaxes and this much trading range price action. They often look like legs in trading ranges, but what they do is they keep gaps open. The bars aren't that climactic, and they're holding steady with lower highs and lower lows, kind of going down gradually. This is too climactic down to support, and then a lot of sideways, another climactic sell off down to support, and then bad follow through. So I think at this point in the day, it wouldn't be the craziest thing in the world to think, hey, maybe there's a 40% chance we make a new high of the day, especially after getting the follow through. Because if it's a trading range day, it doesn't necessarily mean we've seen the high of the day. We may have to go back up here and test these prices. But after the reversal and follow through, pause bar, obviously a bad sell signal. It's a low one after a strong bull breakout at the bottom of a trading range. Buyers below this bar, sense of urgency. Rather than buying below, it was a buy the close bar. And then so range expansion, range contraction, range expansion, second push up. It's a simple leg. There were no pullbacks, but it is a push, a pause, a push, a pullback, and a third leg up here, or a third push. So if you're counting legs, it's 1, 2, 3 legs up, counting spike breaks. But for combining pushes and legs, 1 push, 2, 3, 4. Any way you look at it, this is leg 3 or 4. And it's a small spike in channel bull trend pattern. And you expect the channel to evolve into a trading range. So we expect the breakout of the channel line to fail. And you pair that with the overall bigger picture context. Spike in channel, we're testing the channel line, but we're also at resistance at the top of a trading range. So fundamentally, just look to the left. What happened the last time the price was in this area? Even without the price level being shown, it doesn't matter what the price is. You just see the price action, and up here, there's a zone of resistance. The market sells off. We go back, we sell off. Go back to it, we find we're bouncing, resistance, and then we sell off again. So a couple of reasons here. This is basically to me, looks like a wedge double top as well. So kind of a climactic bar. It's one of the biggest bull bars in the rally. And the channel, fairly weak. Pullbacks getting deep. This one going below the prior higher low. So you could call it an expanding triangle. But still a lower high from earlier in the day. So the bears seem to still have control with lower highs and lower lows. So we might be looking at a broad bear channel or a trading range day with a bear bias. So after that third or fourth leg up to resistance, we had this strong bear breakout and follow through. And this is another always in flip. I think It's probably dangerous to hold long below a bar like this. I think this one's okay. Strong enough rally here. Second leg up likely. But now you've had 3 pushes at this point. You're at resistance. We have a bear bar closing near its low. Might be better to exit longs here, but I think certainly here traders who are long have to get out of longs, and traders can sell to go short. Bear breakout and follow through after a top pattern, wedge double top, and an overall trading range day, and we tested the highs and we're turning back down. You have to wonder, are we going to go back and test the lows? The market's always probing between support and resistance. And I think about that computer game Pong, where it's just that kind of dot going back and forth. And that's kind of what price does. And it goes back and forth between resistance and support. Back to resistance, back down to support. And it probes within these containers. And then it breaks out of these containers and the cycle starts over again. So in this case, we have this spike in channel. You have to wonder, are we going to test the middle of the range? Could we get back down to the bottom? Because the big picture, I have this bear trend line drawn at the top of the screen, and I just put a parallel down here, and you can see that's where the market went and tested. So now we have a big 3 legs down for the bears here. We have a breakout, pullback, second leg, maybe third, maybe even fourth leg, another climactic bar. This one should be yellow, just like the other climax bars. I just missed that one. But that really should be classified as an exhaustion bar. It's a huge bar, but it's right down to support, 3 legs down, overall broad channel or trading range. So this is a profit-taking area. If you're short, probably just take profits on the close of that bar or on any sign of disappointment or hesitation by the bears, which the next bar was. So another always in flipping bar, just like this bull bar, this bear bar. This is a bar you have to respect. If you sold for any reason, exit above this bar, and you can also buy to go long because the market's probing between resistance and support. And now we're back down to support. And again, fundamentally, if we think about what's happening every time we touch this imaginary line, the market bounces, it rallies. It's probably going to rally again. Here, this is a 3-bar micro channel, might be a signal. It's a bull breakout and a couple of follow-through bars, and the signal itself was made up of a big bar, a pause, another big bar. So I got this from Ali, big, small, big, and the market might come back and retest the high of the middle bar, the small bar, because if we think about what this is on a smaller time frame, it might be a spiking climax bull trend. It might be a trending trading range for the bulls. Bull breakout, trading range bar, another bull breakout, breaking above the top of this trading range, which should have been resistance, but we broke out, closed above it for another bar. When we come back and test it, what should have been resistance becomes support. So we bounce here, the bulls get another leg up. So 1 leg, pullback, the second leg had 2 pushes, 1, pause, 2. And then we had a more complex 2-legged pullback here, but a double bottom, testing support once again, and then the bulls ultimately got a 3rd leg up. So 1, 2, 3 legs up, another buy climax, huge bar. I think we're kind of seeing a pattern here with these big bars. This was the biggest bear bar in the past few bars here, but testing support through here. Other than these bars, this is the biggest bull bar, but it's the 3rd push or 4th push testing resistance. Similar here, huge bar, but late, maybe 2, maybe 1, pullback 2, or 2 or 3 legs down to support. And then same here, we have a late leg testing resistance. So we're back at this top of the trading range or top of the bear channel. You get a big bar like this. If you're long, it's better to look to take profits, kind of a gift bar. It's a buy vacuum testing resistance. Why do I have this horizontal blue line here? I like to put levels at stop order prices. Sometimes I'll use the close of the bar. If we got there, I would have. But here we have a stop order buy above this doji, which triggered and then worked depending on, if you took 1R, even 2R of the bar, but we triggered the buy and then sold off. So I suspect there's resistance in this area. You also combine that with, again, the context, wedge double top, bear breakout. This bear breakout bar, there's resistance within it. The top half of the bar, the sell zone, is probably going to act as resistance, and that's about the same area. Plus you have the measured move of this bull breakout. I use the low of the bull bar to the close of the last strong bull bar. So the low to the close, measured move up. So cluster of resistance, not to mention the big bear trend line. So as you can see, as we get later in the day, there's just an overwhelming amount of information, kind of a lot of reasons to look to sell here, in my opinion. Toward the end of the day, the range is getting compressed. We're still getting lower highs, but we're also getting higher lows at this point. Tight trading range behavior here. If this one bar bull breakout is a bull trend, this is a trend line break, this is a retest, and then this is another leg down for the bears. So kind of an endless pullback. Leg one bear breakout. You can call it two legs. Bear, reversal, pause, another leg down. But I think it's a micro channel. I don't think we had a high go above a prior high through here until here. So this is a simple leg, even though it's not all that strong. Leg one, pullback. Leg two, and then another late leg with a huge or relatively big climactic bar down to support. So another reason to look to buy. We're testing support. We have a late leg, and it's an especially big bar. These bars in trading ranges, these climactic bars are common. We can see them all over the place today. And if you look at it, they seem to trap traders into doing the wrong thing. Huge bear bar and traps traders into selling low. Big bull bar, one of the strongest bars through here, but bad context. Same here, and then same here. I think here this is basically another wedge double bottom, so 3 pushes down to support, rally, overall trading range, or bull flag, and then the bulls get another leg up here. So this isn't always a buy, but for a scalp, because even if you get 2R of this bar, by the time you get even 1R, you're at the top of the range, and it's probably better to look to sell up here. The bear trend line has been resistance all day, and another breakout attempt of it just failed at the end of the day. And the range got more and more compressed with lower highs and higher lows. So for day structure today, I would call it a bear trading range day or a horizontal trading range day. The day was horizontal for the most part, but I do think the bears were stronger with the lower highs that they were able to keep for the majority of the day. They had lower lows for also the majority of the day. But for the most part, the day was mostly balanced. I mean, the bears, not all that strong. These legs for the bears are big and they move price, but what the bears really lacked was time control. And when the breakouts really mattered below major swing points, like here, they failed to get follow through. And here, they failed to even close below the support, the major low. So mostly a stalemate kind of day. It'll be interesting to see what happens tomorrow. Pretty strong rally on the higher time frames. We had that spike in channel yesterday, carried into a trading range today. But because the trading range has now lasted over a day, I wonder whether bulls still have probability on their side. If there's still a slightly higher probability we get the bull breakout, or if we will get trend reversal and get the bear breakout. But we'll see. So thanks everybody for watching, and I hope everyone has a good night.